won many awards for Outsourced CFO. And Louw also is a fast-growing company. So you're a scalable company helping other companies to scale. And I think that is really what's interesting about what Louw does. And what I like about asking Louw questions is when we thought, let's cut some salaries in the summit, I asked Louw, how does it look out there? And he says, Audrey, there's companies that pays nothing. There's companies that pays 50%. There are companies paying 75%. So what's your business model and what works for you? So I'm going to now, Louw, do you want to introduce yourself or was that good enough?
No, I think that's perfect. Thanks so much, Audrey.
Okay, so the first part we're going to talk about is relief funding. And I know some people who come into the sessions all from other parts of Africa, but I've quickly looked at who's there. I think they're mostly South Africans, so let's talk about relief funding. We had a poll asking you, have you asked for relief funding? Were you successful? Were you denied? We can't run that poll at the moment. So please just put in the chat function, how was your relief funding application received? How did that work? And let's, Louw, talk about the relief out there for COVID-19.
Yeah, Audrey, thanks for that. I think relief funding has definitely been one of the topics on the lips of entrepreneurs all across the country and probably all across the globe as well. We find ourselves in unprecedented circumstances at the moment both in our personal lives, being locked down for weeks and weeks on end now already, but also definitely in the business world where so many different companies and different industries have had limited trading opportunities and some of them even no trading opportunities like you've mentioned a little bit earlier. So it's tough circumstances out there. You know, we're heading towards the 5 million mark of people affected by COVID around the world. So it's really, yeah, I think it's one of those once in a century kind of situations we find ourselves in. So relief funding is definitely a relevant place to start. I think a lot of companies had to scramble very quickly. Like you mentioned, some of the businesses would drop off 10%, 20%, 75% of revenue depending on the industry. And if that's your company, then you very quickly have to do a bit of footwork in terms of managing your cash flow in the short term. So we saw the government come to the table and we've seen some of the private players come to the table, I think, with some exciting relief funding opportunities. I think the Ruperts and the Oppenheimers were some of the first guys to the table, with the Ruperts releasing the SAFT fund, which was a little bit over R1 billion that was distributable directly to employees. I could go into more detail about the SAFT fund, but I think it wouldn't make so much sense because the guys are fully subscribed as of a couple of weeks ago already. So over R1 billion that has been applied for, and I think they're just about processing the last ones at the moment. Then the Ruperts also came to the table and we saw them partnering with business partners to administer another R1 billion fund, which I believe they got about 10,000 applications in 3 days, after which they closed that as well due to oversubscription. So very, very quickly we saw R1 billion allocation going down there as well. From the government side, the most exciting one, I think, was the Department of Small Business. They partnered with SEFA, the Small Enterprise Finance Agency, and they brought a smaller package to the table, a maximum of 500,000 Rand, but at prime less 5% interest. So, you know, at the moment, that would be, I think, 2.25% interest rate for the loans. So it's still a loan. You still incur debt on your balance sheet. You still have to pay the money back. But at least it's really cheap interest rates, and the conditions under which they were dispersed were also quite good. But we also believe they got something like 30,000 applications for that. So it was also impossible for them to work through everything. And unfortunately, the bad news for this morning is we received word this week that is also closed out completely. But then the hope for us at the moment is the government, the president, released a statement around 200 billion Rand worth of underwriting for loans for businesses in the economy just a week or two ago. So that's a significant increase in the amount of potential relief funds. At the moment, how we've seen that administered is the first 100 billion is going straight to the big 4 banks and 1 or 2 other investment banks to administer as government-backed loans. But unfortunately, these loans are coming to the party at prime interest rates and under more or less normal lending conditions. So a full due diligence process, really strict terms, things like full surety being required by many of the banks from the entrepreneurs and from the directors. we're also seeing things like blockages of dividends for the 5-year term of the loan. So you won't be, even if you are repaying your loan, you're still not allowed to pay out dividends from future profits for the 5 years of the loan repayment term. So it's not really an exciting relief funding option, unfortunately. But that is where the biggest amount of funds sit at the moment. So if you're in a position where you know, R1 million loan at prime interest rate would make all the difference to you right now, definitely speak to your personal banker, to your business banker or your business banker. They are the ones who have the direct line within the big banks to help you figure out that process. The application forms are on the internet, so you, depending on which bank you're with, you can probably Google that and find it on their websites. But yeah, it is a tedious process, almost like applying for a full business loan that you'll have to go through. And we haven't seen a lot of it administered quite yet. A lot of entrepreneurs I've spoken to have said, look, we're in the process, but the communication is slow. My banker is unsure. Nothing's been paid out. Nothing's been signed. The terms I've gotten have been horrible. So unfortunately on relief funding, I don't have a lot of good news this morning, Audrey, but we're keeping our eyes peeled and hoping for something to come out. The only other thing I think that it's not quite a relief funding option, but we'll probably speak about it later, is the UIF's TERS offering, where some of the cash on employee salaries get reimbursed to the companies. So that's not a loan. That's a pure grant from the UIF side that goes straight to the employees of affected companies. So that's also kind of a way to get cash into the system to pay employees with that companies would otherwise not have had. And this one is the only one that is not a loan. So you don't actually have to repay that to the UIF. So that's also a way to bring some cash into the system.
Okay. That's very interesting. The poll we wanted to run here was that we would have asked you, did you consider to take up some relief funding? What was your experience? Were you successful? Were you unsuccessful? Ah, there's a poll. Yeah. Is everybody in this session? Did you manage that, Saskia? Well done. So do you want to quickly answer that, everybody in the session? I can't answer it, so I guess I'm out as a panelist. Host and panelist cannot vote. Okay, that's fine. So,
coming in.
Is it coming in?
Should be very interesting to see.
Yeah, so also your customers, Louw, how did did a lot of them apply for relief funding? So yeah, we for instance, applied for the CFO funding. We never heard. Oh, there's your answer. Louw, can you see that?
Yes. Here we go. So most people haven't considered it. And a good amount of people, 37% of people have applied and not gotten it. Yeah, I think that roughly sums it up. For the first one, I have not considered it. I think things moved so fast in the first couple of weeks after COVID. It was such a big scramble for companies to adapt and make leadership decisions that I think a lot of people just didn't even look at the many options because there was so much information available out there. Do not need it. Very glad for you guys. 21% of guys said we didn't need it. That's the first prize. If you've got paying clients still that can fund your operations, that's absolutely the best place to be in. And then have applied and did not get it. Yeah, unfortunately, guys, so many people in the market are part of the 10,000 companies who've applied to business partners or the 30,000 applications that the Department of Small Business have received. It's just been blown out of the water. It's the need is 100 times bigger than the offer has been so far. Hopefully now with the bank process, if you're gutsy enough to take out the loans at prime with some quite strict terms, then there should be money on the table as a potentiality. But yeah, altogether, yeah, not so much. And I mean, we'd love to hear from the few guys who did get it. I see there's only a very small percentage of guys who actually did receive their funding. So victory to you guys. We hope it's at some of the best terms that have been out there.
Thank you. That's then about relief funding, and I'm sure we'll get a few Q&As on that. Guys, if you want to put some comments in the chat function just about your experience there from our side, CFO, we applied very early. We had one message back from them, Louw, to say please fill in all the forms that we've already submitted.
Yep.
And then nothing. So I don't know whether that means no or nothing. I have
Yep.
no idea. And that was I think that opened and we were there.
Sure.
So we'll see what happens there. Let's talk about budgeting and cash flow. We've got another question there, because I think in times like this, you need to be close to your numbers. And are you ready with your next poll about one up? Because Louw said to me that Mo doesn't have proper systems. So let's quickly check what you guys do. And if you mark, what do you use as your financial system? And if you mark other, can you put in the chat function what other system beyond Excel and Google Sheets, bank statements, paper, Sage, Xero, and other? Then let's talk about your cash flow and budgeting process, Louw, in this time. Why is it important? How does it work? What do you see as trends out there?
Yeah, Audrey, I think that's something that's been critical for management teams and founder teams all across the board, where normally your budgeting process can happen, you know, with once a year or once a quarter, or maybe if you're doing it very diligently because cash flow is tight, maybe once a month. What we've seen now is things changed so fast in a couple of weeks that so many entrepreneurs had to make immediate decisions to change up some of those budgets. If you were trading beginning of March with R1 million a month kind of income, and all of a sudden by the middle of March or towards the end of March, that revenue was halved because you are in the tourism industry, or you're an events company, or a marketing business, or something of the sort, or a vendor that sells physical products, you know, your revenue streams have been cut off to a large extent. So you very quickly have to review those budgets to make sure that you have enough income coming in still to cover the expense base. And you know, because we've spoken in the beginning about so many companies have lost a big chunk of that top line revenue, you have to make serious adjustments in terms of the budgets to cut costs adequately. Otherwise, you incur big losses in this time, which means you'd have to take on external capital or debt to stay afloat, which isn't the best way necessarily to do it. All right.
So then, yeah, you can comment. What do you see in front of you, Louw, of this audience?
So interesting. I think in terms of systems, it looks like Sage 1 at 28%. Unfortunately, also next to that, Excel and Google Sheets. Lots of guys still running their accounts without a formalized system. The fewest ones on bank statements and paper. So that's good. That's good to see. I think South African companies are quite forward thinking. And then also a good percentage coming in on Xero, which is one of the kind of leading global cloud accounting packages that we're seeing come into the market. So a decent spread. I think what we were trying to figure out with this is just where are you guys at as entrepreneurs in terms of having your finger on the pulse in terms of day-to-day finances and cash flow. If you're running off bank statements or so, it might be a little bit slower before you have the full picture in terms of what does your balance sheet and your income statement look like if you have to wait for an accountant to process all of the information and send it back to you. Whereas if you're on Sage or Xero or one of the cloud systems, you have live access to that. You can log in today and you can look at what does my debtors book look like today live, and what does my cash flow look like today live? What is my month's profitability or lack of profitability to date, so that I can make quick decisions. Because like March as an example, the game changed in March, right? You had to make some serious decisions in terms of your finances in that month, and also in the months to follow. So I think we just want to understand, like, where are you guys at with the systems you use, and how available is financial information for you to make those big decisions quickly?
So you are saying, I've never been so close to my numbers as I've been in the past month.
Yeah.
Because we're all in a nice comfort zone, and suddenly you must make quick decisions, otherwise you pay a huge price. Yeah. We had Aisha Pandor, and I know Sweep South is also one of your clients, on the system last month, and they already made their cuts. They saw this thing coming, and they made their cuts already in January. So I thought that was quite forward thinking. And then that means that you actually do a lot of business modeling for risk management, meaning that you actually forecast what could happen in March if bad things happen.
Yeah.
And I think very few of us actually have that type of cost-cutting, edgy technology that you use to forecast. Can you maybe talk about cost-cutting strategies and staying close to the numbers? What are people supposed to be doing? And even lead into pivoting your business model from a financial perspective. Just an open discussion from your side, Louw. What do you see out there, and what advice can everybody on this call?
Yeah, I think one of the kind of golden nuggets that I'd want to leave all the attendees with is just not to incur too many losses in this time, right? To try and figure out however much your revenue has dropped, you have to try and cut your costs accordingly to make sure that you don't lose a significant amount of money in this time for which you have to incur debt to salvage it. Like one of the quotes that really struck me was an entrepreneur recently saying on an open forum that they've only finished paying off their 2007, 2008 financial crisis debt January of this year, and now this crisis has hit again. So you don't want to be that entrepreneur who incurs such a big hole of debt right now that they spend the next 5 or 10 years climbing back out of that hole. So unfortunately, if you're one of the companies whose revenue has dropped significantly, you have to figure out how can we, rein in our costs, at every different level to make sure that we have the cash flow and the profitability to see it through this crisis before we get to the pivoting and adjusting your business model. So I think, for a lot of companies, unfortunately, one of your biggest expenses would be your staff cost. So salaries are one of the first things that a lot of entrepreneurs had to make some tough calls on. You mentioned earlier, we saw small salary cuts. We saw massive salary cuts. We saw some companies retrenching a lot of their staff. We saw some companies asking staff to work for little or nothing. I think whatever that scenario was for the specific business, they had to adjust to bring down the cost. And unfortunately, the teams of the companies had to, bear that burden with the business. Otherwise, the whole company sinks, and then no one has a job in a market where it's really difficult to find a new job. And then otherwise also there's a whole income statement full of different costs, which have an opportunity to lean down your business, to make sure that you go through that income statement with a fine tooth comb, to look at every line item of expenses. Like, what do you actually really need? Maybe I know one entrepreneur said they actually realized now they had 2 CRM systems and they were paying for both of those in dollars, right? Now you find that because now all of a sudden the 3,000 Rand system and the other 3,000 Rand system, maybe in R1 million a month, it wasn't a problem for them. But now that they're looking at it in detail, they see, well, we're throwing money in the water here. So cut the one we don't need and maybe scale down the package of the one that we actually really do need. So go through each one of those line items and make sure that anything you can cut, completely cut it out. Anything that you need to lean down. And if you really truly need something, we've seen a lot of people now just go out and negotiate with your suppliers. Just tell them, look, guys, we love your product or we love your service. We need it every month, but we can't afford to pay the 20,000 Rand a month we were paying because we lost half of our income. Can we discuss a reduced rate for the next 3 months? And a lot of companies have been quite open to that, we've seen.
And that's great advice. I want to ask you about the business model and what people can think about. The companies that really were hit hard has to change their business model. Yes. The other companies are flourishing. There are guys that are now doing really well because suddenly they've got a digital audience that they didn't used to have. So the summit, for instance, was one of those that really were hit hard because we had a physical event and all our packages and all our sales were around that process and leading into that process. What happened with us is we took debt just before COVID-19 to grow our company, to build online solutions. So it was our business model going into the year. And suddenly that money that we already negotiated and got on the table, we're now being used to survive. I think this can be a big problem because we didn't have to actually go and look for money because we already raised the money for a growth model. But now it became a survival model. I think the growth model were implemented, but can you talk about the crisis there? And we've got a poll here about debt. Maybe Saskia can put it up. If you are taking in debt, is it to scale your business, survive the current crisis, or build something new? And maybe it's a combination of all of those things, but what is the dominant one? So for us, it was to build something new, but now it became to survive the current crisis. Can you talk to us about this, Louw? Because your business model and where you're going with debt is very important.
Definitely, yeah. Maybe firstly on the business model, I think a lot of people had to make significant changes to the way they do things, and even if they were fairly digital companies, there's still some pivots that are needed. So I think that something that stood out for me quite well from a recent Bain & Company report was the two things as they said that are critical in terms of pivoting in the current circumstances is to go simple and to go digital. So you want to make sure that your product offering or your service offering is really simple for clients to understand, and the onboarding process is streamlined. And then you also want to make sure that it's digital, that people can find you online, a new prospect or a new lead can find you online, so your marketing must move completely online. And then you must also figure out how you can render the service online with remote staff, with a remote product delivery, etc. So I think just figuring out for you, like, what does it look like to go simple and digital, regardless of your type of business. And then there's this question of debt. Wow, I think that's an interesting one, right? Half of our guys are taking in finance to scale their companies still. Almost a third for survival, and almost a third to build something new. So wow, I think we've got about 70% of people are scaling or building something new. I think that speaks to the South African entrepreneur, right? It's a resilient bunch. I think we've also got maybe a heavily slanted tech entrepreneur on the call today, just given that we're here with the Innovation Summit. But I think that's an exciting figure. If you're not just in survival mode, you're there to accelerate or to build new products and services that can take you into the future, then I don't have to teach you anything about pivoting. You guys are already doing it. You're building for growth. You've already figured out how to simplify processes and how to go digital, like the Innovation Summit itself. Well, you guys are a brilliant example of it's a physical, physical offering that has to go digital, and you guys are making that transition. And so are a lot of different companies. If I think of, we've got a client that does, they're in the food distribution business, specializing in fish. So they do, fish physical deliveries, and they've built an e-commerce based platform, and they have 10x their revenue in the last 3 months. So that's they're doing 10 times the sales now that they were doing prior to COVID, because they're selling online. They figured out the distribution. To buy from them is simple. It's online. There's an app. There's a web-based platform. It's easy, and they know how to reach their target market, and they're doing it super well. And those guys are exploding because of the circumstances. So that's not every company's story. For 19 out of 20 entrepreneurs, I think this will affect you negatively, or it will shake you up at least and say, like, look, if you keep doing what you have been doing the way you have been doing it previously, it will definitely affect you negatively. But if you can find the right ways and maneuvers to change up to suit the current circumstances and also to suit the business world of the future, I think the companies will be so much better off. And I think a lot of those guys sitting on the call today, they know this and they're actioning it already if I look at the funds they're raising.
That is super cool. So basically, you are taking us from a disaster, asking for relief funding, to a very positive space where we actually have to recreate what we're doing and in a new world. That's what we also thought in the Innovation Summit. We thought we won't discard a physical event in 2021. Of course, we want to see people interact with people, but the virtual edition will stay with us. It's not a once-off thing. It will actually enrich everything we do. So it's a hard lesson, it's a hard stick, but it's something we always wanted. We actually desired this, we just never made the time or put the money to create it. and now we were forced to do it. So there is kind of a purification happening. And I think what you are saying about the business model is quality and simplicity will drive future sales. So that our customers want simple and they want quality. And I think if we can do that digitally, you are solving a big thing in your business model. So it's, Louw, do you have anything else to say? And then we're open for questions and answers. I only see one question today so far, which is about scaling. And I know this is your passion topic. Guy Harris is asking any suggestions for websites to help you scale your business from, say, 10 or 50 employees to 500. Do you want to talk about scaling and then answer Guy also specifically? Because I think when we go digital, scale becomes a discussion point. And I don't think everybody, a lot of South African businesses think growth and scale is the same thing. Maybe just talk to digital scale.
Yeah, maybe a Guy, if I were to think of one resource that's been very valuable for us in the process, it's definitely the resources shared by Growth Institute in America. They're the people behind Entrepreneur Organization, and they've spent about the last 30 years just diving into this concept of scaling up a company. They've got a book called Scaling Up that's really, really amazing, and it's a 200-page toolkit that has all of the different elements to scale up a company successfully from 30 years worth of experience of a very professional team there. So it talks about that concept. If you're 10 people, you want to build to 100. If you're 100 people, you want to build to 1,000, and so forth. So I think it's really important to make sure you create the scalable infrastructure in the beginning that can sustain that growth, and to also make sure that the type of business model that you're choosing and that you're building out is one that can be significantly scaled up. Like I think a lot of the tech entrepreneurs who are here, I've taken that into consideration, right? No one wants to give their life and pour all of their energy into something that's going to consistently grow at 6% for the rest of their lives. It's not exciting, right? We want something that can double, and that can double again, and that can double again. That's really where you create significant value. And I think this going digital trend, like Audrey mentioned now, it's a big push towards that direction, because with lower infrastructure cost, remote teams, no physical office space, no physical almost anything, for the moment anyway, and an audience that is completely online, you can build a much more scalable company like that if you can do it right. So I would go for that, definitely for that resource. They've got a ton of videos and things out about scale up methodology that's really good to have a look at. And yeah, just keep on.
Mention that website again. Saskia, can you type it into the chat function? Just say it again.
It's growthinstitute.com.
Growthinstitute.com. So there's a website with a great scalable resources about how to scale your business.
Yeah, I think that's the best one I can think of. Yeah.
So do we have any other questions from this audience or comments? You're all really welcome in the chat function. Write to all the attendees, ask questions. I think you've got one of the sharpest brains in the financial industry that you can actually tap for free today. And maybe in that sense, Louw, just give us the contact details of Outsourced CFO if people want to make contact with you. Saskia will write it. And then also from our side, if you want to write to us and let us introduce you to Louw, then it's info@innovationsummit.co.za. And from your side, Louw?
Yeah, maybe just a closing remark from my side, Audrey. I think leadership in this time is something we've spoken about a lot in some of the webinars we've run, in some of the client conversations, and with a lot of different entrepreneurs. I think, this is a time where true leaders are going to be made. So us as entrepreneurs and business owners, we have to lead teams through this chaos. We have to figure out how our companies need to pivot. We have to make some tough calls in terms of, cost cutting on the one side and changing the business model and going digital on the other side. It's really a tough place to be. But I think, if you can stand up in this time and come out as a strong leader, people will definitely remember that into the future. We've got this saying that, you know, what we do now will echo, what you do in this life will echo into eternity. It comes out of the movie Gladiator. They say it there. And I feel this is a time like that, right? What you do in this COVID-19 time will echo into the future of your business and into the future of your career, basically for the rest of your life, because the relationships with your staff and the relationships with your key clients and with your partners now will be solidified in a really tough time where it's being purified with fire. I think already you used the word purify a little bit earlier. I love that. And I think that's really the process we're in right now. And if we can get up every morning and see it as such, even though it's tough, and forge ahead and make sure we can lead our people through it, I think we'll come out as stronger business people who build a stronger economy for South Africa and as part of a global village into the future.
Thank you, Louw. That's very, very inspirational. And that's all my dealings with you have been like that so far. So can we quickly answer Mark Kinnear's question? He says, when doing a cash flow forecast, how do you project sales moving forward? So in an uncertain time, how do you do that?
That is probably the $1 million question that you've got right there. I think projecting revenue accurately under normal circumstances is, for a lot of companies, quite difficult. If you've got a fixed income type model where you have, I don't know, maybe fixed retainers every month or fixed income that's predictable, it's not so hard. But when you're a project type company that has, they have a client for 3 months and then they don't, or they have a big delivery order and then they don't, that is already under normal circumstances hard to predict. So now in the COVID-19 time, it's even so much harder to be able to say, like, look, I don't know what this client will say next month. Will they be around next month is a big question as well. So I think for this, communication is something we've also spoken about quite a lot. To communicate more than you think is necessary, both with your people internally and also with your clients externally. So I think picking up the phone and doing that call and understanding where is my client at right now, what will their appetite for my product or service be in the immediate future and in the longer term future? And if their need is very low or non-existing in the next 3 months, it might still be worth it to help them if they can be a client for life after that, if your company can sustain that. So I think close communication with your clients will help you understand their circumstances, and that will help you predict the revenue in a more accurate format, which will help a lot. And then, I mean, it's even falling back on contracts isn't a great way to go right now, because when people's backs are against the wall, even a contract to perform on a product or service purchase might not be executable for a client. So I guess my best bet would be like, look at the relationships you've built, look at those companies and think about how they have been affected themselves. And then you can start doing your predictions in accordance with that. What might make sense, we've done this with a few clients, is to do a couple of different scenario models to just say, look, the expectation can be here, it can also be here, it can also be here. Let's plan for all of those scenarios, right? Let's create a high road and a low road and an expected road or something of the sort. If all our clients stay the course and everything goes well for them, we think our revenue projection will be this. If everything goes absolutely terrible and a lot of our clients can't pay or can't order or can't use the service or whatever be the case, then our revenue will be down here. And then what do we expect is the scenario? If we apply our minds and we speak to our clients, what do we project in the middle? And then you have to have scenario plans for all of those. Maybe you have to have a budget even for all of those. If month 1, it is the high road, amazing, no cost cuts or only a little bit of cost cuts. But if month 1, it's the low road, then bigger cost cuts, then you already have a plan for that. So I think that there is no perfect at the moment, but great can be the enemy of good in this scenario. You want to have something that's good. It's never going to be quite perfect. So you want to at least try your best to get it as accurate as you can. And if you can't get it accurate, do a couple of scenarios. I think that'll help.
That's great advice. I'm listening as well the whole time. Then Sabrina van der Gryp is asking, are you only reviewing fund platforms from lending institutions or looking at crowdfunding platforms also that would share ownership with investors? Do you
so we could definitely look at the crowdfunding option. Just our experience with that has just been that the crowdfunding market in South Africa and in Africa is still really, really small as a percentage of the total financing mechanisms available out there. So for a very specific type of company, generally in a relatively early stage, looking at a crowdfunding option could be interesting if you've got a really good distribution channel. If you are able to reach a lot of people with your story in a clever way, and it's an amazing story for an innovative or creative product that you want to bring to market, or something that has a big impact, I think there are definitely options for that. But for the average business who has to raise more significant money in a quick succession now to be able to cover costs, I don't know that a crowdfunding process would be that valuable.
Actually, what I saw, the companies that do well with crowdfunding already has a customer base, and the customers like what they do, and the customers buy the stock in that company. So if you're completely new in the market, it's very hard to raise that crowd excitement, except if people actually know what you've done. So the success stories all had good customer base that bought into the company through the crowd. I don't know. That's what I saw so far.
It's that distribution channel, right? People who have money, who are willing to support your story or the journey you want to embark on. You must be able to tell that story really well and reach people who would be willing to put money into something right now that is a big ask for someone to put money down against potential future value of a newish business.
But it's maybe, Sabrina, I think it's not a bad idea, because we don't know crowdfunding. And maybe if you are in such a business that's got loyal customers that love what you do, and you need to raise money, this is an option that you might never have considered to actually explore. So it's an interesting thing to play with. Then how has COVID affected the risk appetite for foreign and local investors? Stuart Childs, I hope I'm pronouncing it correctly, is asking that. Foreign and local investors, yes, that affects the startup community.
Definitely. Yeah, so, it's also like it's an unprecedented time for entrepreneurs. It's the same for equity investors, right? Lots of the global funds, as well as all of the local venture investors, would look at this and say, look, a company that was exciting 3 months ago, we don't know how this will affect them in the next while. We don't have enough data. We also don't know how things will play out. Will the virus be eliminated in 3 months and business be back to normal? Or is this a 2-year process we're going into? It's going to be much deeper of an economic winter in the future, and we're not sure how the company would do. The interesting thing is, I would think that investor interest would dry up almost completely, and people will just say, look, we're not investing right now. We're giving it 3 months or 6 months, just see how the company does in the new normal, and also just to see where things go with this COVID environment we find ourselves in. But we've actually seen some more bigger deals than we normally do in the last 3 months. That has been really, really interesting, both from internationals as well as some from local. So I think this is where it depends so much on the business. All investors still have some kind of mandate to distribute their capital, right? You must remember, if you're dealing with a venture fund as an example, those guys have a mandate to distribute the funds they have raised, and they earn fees by having capital under management, which generally means that they have to make a certain, they only earn income on the investments they have actually made. So these guys are still highly motivated to find the right deals and to do big ticket transactions in a time even like this, if they are able to mitigate their risk. So if you're able to showcase how your company has already done its pivots, already done some of its maneuvers, whether that be some cost trimming on the one side or new digital product offerings on the other side, if you can showcase that and showcase how you will be resilient in the future, or even how you will flourish in the future, like the e-commerce company we spoke of earlier, they now all of a sudden their valuation has shot up 10 times because their revenue has shot up 10 times. So they're a very interesting conversation now for a venture investor in the e-commerce space. So I think if you're able to still differentiate your company and mitigate the risk for an investor, there's a almost surprising amount of capital out there looking at a smaller pool of potential deals right now. So this might actually just be the time to close something. We've just got word this week of one of our long-term clients doing a massive exit. Numbers aren't public yet, but a huge exit to an international private equity company, which is super, super exciting. They've just, it's just literally in this COVID period, they've done the whole deal, and it's signed and sealed now.
So we will hear about it shortly.
Absolutely, yeah, absolutely. You're able to. I think the Helios Eagle Towers deal you're able to potentially Google already, but then the numbers may or may not come out in the more distant future.
Fabulous, fabulous. Saskia, maybe you can just announce from this week we're doing these founder series every month, and every time we're going to allocate a free ticket to the new Digital Innovation Summit, so you don't have to commit to travel to Cape Town this time. Next year, hopefully we'll see you face to face, but we're all giving away digital tickets. So Saskia, do you want to quickly announce who, I think you put it in the chat box, but who got today's digital free ticket?
Sure. Congratulations, it's Matilda Mpai. You were the first one to log into our session today. So yeah, we're looking forward to seeing you there. And thank you, Louw. I think it was very valuable. When challenges like these hit, we go through a myriad of emotions, anger, frustration, and until we get to a co-creation phase, I think to actually survive this period, tips and skills that we are taught through to listening to people like you are really valuable, and I hope it can help a lot of other startups and companies get through this difficult time. So thank you very much.
Thanks, Saskia. Thanks, appreciate that. It's been a pleasure being with you guys and chatting through some of these complexities on the finance side of business. I think the Innovation Summit will also be more relevant now than ever before. So I think you'll have a very interesting uptake for the digital conference this year, and may it be the start for very interesting new things after this pivot in the near future. Thanks, guys.
Thank you, Louw, from my side as well. We have put Outsourced CFO's contact details on the chat box. You can contact us. I'll introduce you to Louw personally if you want to know more about what they do and their services, because they are digital. I think they paved the way to give you that chartered accountant services that you as a startup could maybe never afford. Maybe some of you can afford it, but many of us couldn't. And they do it in a different way so that you don't have to pay a full salary of that type of business modeling and intelligence that can take your business to the future. So thank you, Louw, for your time. Really appreciate it. And everybody who logged in, thank you. Brian, I see you. Guy, so many people. Alsaby, Patricia Norris. Oh man, I'm so happy that you're there. Thank you that you all in there, and good luck with everybody paving their way in their business, being brave, making changes and changing the world. Thank you.
Keep at it, guys. Thank you, Audrey. Appreciate it.